Good morning and welcome to Broker Briefing, Australia's premier platform for brokers and investors, providing networking and digital events for leading ASX listed companies. I'm Jane Morgan, and today you'll be hearing from 5 companies: TMK Energy, OD6 Metals, Adavale Resources, Challenger Gold, and Queensland Pacific Metals. So up first, we are joined by TMK Energy with the ticker code TMK, a company focused on the responsible development of Mongolia's significant gas resources. To tell us more, today I am joined by CEO Brendan Statz, who is joining us live from site in Mongolia. Good morning, Brendan.
Hi, Jane, and thank you very much for the opportunity to present today during the webinar. And thank you everyone for joining. I hope you find it interesting. I'm currently on site in the South Gobi Basin of Mongolia, where we're undertaking a very important work program on our Gavantes coal seam gas project. Just a little bit about me. I'm the CEO of TMK Energy. I'm a geologist by background, and I've been working in Mongolia for over 10 years, particularly focused on coal and coal seam gas. But just on TMK, so we're an ASX listed company. We're an oil and gas explorer, but we're really 100% focused on our Gavantes coal seam gas project here in the South Gobi Basin. Next slide, please. I'll just say with the disclaimer, this presentation is available on our website, and there's also a lot of other great information on the website. So if you're interested, please have a look at the information on the website, and you can always contact the company with any questions. So with regards to the investment highlights, so this is a snapshot of our investment highlights, and I'll try and talk through these more as we go through the presentation. But the key ones really are we've got the largest gas resource, or 2C gas resource, in Mongolia. The project's located very close to China, about 40 kilometres south of where I'm sitting today, and close to existing gas infrastructure, which is located in northern China, which connects to the whole east coast of China. We're relatively early stage in the exploration process. We've been exploring for about 2 years, but the project's significantly de-risked with extensive drill hole database, covering a significant part of the license area. And that really relates to the extensive work that's been completed on coal exploration in this part of the South Gobi Basin, where there are clearly defined coal fields and a number of active operating coal mines. Just broadly, energy in this part of the world, Mongolia and in China, is they're short energy, and they have a particular appetite for gas. And so we think we've got the right project in the right location and at the right time. The data we have, as I mentioned, it's early stage, but we've got a significant data set, and it all points to a world-class coal seam gas project. If you look at the key technical parameters, they're equal to or better than developed coal seam gas projects around the world. And my experience is really in Australia, but even worldwide, comparing to the US coal seam gas fields, where coal seam gas really kicked off. So in terms of the work program for this year, we're at a very interesting stage. We've got a very active work program for the rest of the year, with a couple, so there'll be a lot of news flow, and also taking the project through some key development milestones in 2023. So, it's an exciting time in the journey for TMK. Just quickly on the corporate snapshot, I'll just point out a few features. We've got about $7.5 million in the bank, so we're well funded through the proposed work program for the rest of this year and into next year. With regards to the board and management, a strongly aligned board and management, and board and management have about 50% of the shares on issue, so significant skin in the game for the board and management. And the other interesting aspect of our register is we've got significant local ownership, or ownership by Mongolian nationals, which I think is important when you're developing these projects in Mongolia. Next slide, please. So on the board and management, we've got a diverse range of skills and experience, which I think really suit the stage of TMK's journey at the moment. In terms of the skills and experience, we also include both Mongolian nationals on both the board level and the management team level. The four key members of the management team have been involved in the project pretty much since the start of this project in Mongolia. And I think we've got a track record of delivering when it comes to the project. We've been able to hit our targets on schedule and really move the project forward successfully. Thank you. So when we're talking about the Gavantes coal seam gas project, just big picture, I guess the key attributes are the size of the project or the scale of the project, the location, and the quality of the asset. So with regards to size, we're talking both geographically, it's 8,500 square kilometres is the exploration licence. So that's a very, very large area and basically the whole western portion of the South Gobi Basin, but also in terms of the resources. We've got resources of a 2C plus 2U of about 6.5 trillion cubic feet of gas. So, it's a very, very large gas project. And that talks to the location being right next to the world's largest energy market in China. And as I mentioned, very close to that existing gas pipeline or infrastructure that runs across the northern China and connects to the east coast. So it's got the scale, strategically located. And I guess the location really talks to a real advantage in terms of cost of delivery, cost of delivering gas and energy to that large market, compared to where China currently sources its natural gas from. The other one is the quality of the project, and I'll probably talk more to the quality of the project as we look at the data. But yeah, we consider this a world-class coal seam gas play. I won't go through all the significant milestones and achievements, except to say that the project really kicked off in 2019 with the early prospecting agreement, which is the stage before an exploration license. And as I mentioned, I've been involved since and really leading the project since 2019, and as have the management team. We've been involved since the very beginning. So that's the beginning. And now, just towards the end, where we're at today. We're currently in the process of commissioning 3 production wells. You can see them from the GER here, but so we're commissioning them and we expect to bring them online in the next 2 weeks and start an extended production test. So I guess over the course of 2022, we really proved that a large amount of gas in the ground. And the key question is, can we get that gas out and at what rates? And that really talks to the commerciality of the project. And so we'll turn these 3 production wells on in 2 weeks and do an extended production test over 6 months. And really, that'll really go a long way to answering the question: can we get the gas out, and at what rates? So just for the geologists that have joined today, these are the drilling results which we from the exploration program last year. I won't go into in detail, except to say that with the exploration program, we delivered 100% success rate, and success really looks like what success is intersecting thick coal with high gas and demonstrating the gas composition and the permeability suitable for a coal seam gas project. So the drilling results last year were excellent and delivered all the key technical parameters required to take for a coal seam gas project. And I'll just highlight a couple of the key advantages of this project is really the coal thickness. We intersected between 40 to 175 meters of coal in each of the exploration wells. So that's very, very thick, and that's the thickest coal seams of any coal seam gas project that I know of. And then not just that, the gas contents are very high. So around 10 cubic meters per tonne on an as received basis. So very, very thick coal and very gassy coal. So that information the results from the exploration last year went into our maiden contingent resource estimate completed by Netherland Sewell, and that's where we've certified 1.2 trillion cubic feet of gas based on those results last year and the existing data set. So that's a very, very large gas project in itself. 1.2 TCF, if you can sell that at $10 a gigajoule, that talks to about $13 billion worth of gas. So, but the important thing to keep in mind, though, is this is just from the exploration program last year, which we really focused on a small area. And this resource estimate is based on only 60 square kilometres, which is less than 1% of the total project area. So there's still plenty of upside, and I guess it talks to the scale of the project. So this slide really talks to the quality of the project, and it's just comparing the gas resource density, so gas per unit area, with some of the most well-known and developed coal seam gas projects worldwide. And so the chart on the left really plots the 3 small blue dots are Powder River Basin in the US, the Surat Basin in Australia, and the Bowen Basin in Australia. It generally shows that those projects, which are very successful projects, operate between 4 to 6 BCF per square kilometre. But the advantage of the Gavantes project, it's that blue dot up in the top right-hand corner. It's running at about 33 BCF per square kilometre. So just a very, very high resource density, which talks to high operating margins and low production costs. And so that's a significant advantage of this project. So on to 2023. So this is our work program for 2023, and we're currently on plan, on budget, and on schedule. And the key one is we drilled the first aspect of the 2023 work program is the pilot well program, and that's where we're drilling these 3 production wells. And the objective is really to flow gas to surface, understand the production profiles, and all going well, demonstrate the commerciality aspects of the project. We know how much it costs to drill a well, and really how much revenue we get out of the well. It depends on the production rates, and that's what we'll understand in the next 6 months. So we drilled those 3 production wells in May. We're putting in the surface facilities in June, and currently we're nearly finished that work, and we're looking to commission those wells in the next week or 2. And then the production testing itself will be over a 6-month period. And initially we expect, as typical with coal seam gas projects, high water rate at the start, a low gas rate, and then over the months we'll see the water rate drop off and the gas rates pick up. So yeah, that'll be, and that's the real key milestone for the company. We understand there's a large amount of gas in the ground, but now we need to demonstrate we can flow it to the surface. The other key aspect of the work program is an exploration program, similar to what we did last year, improving up the contingent resources, but we'll move to a different area and continue. And when we're moving to a different area, it'll be existing coal fields that have been defined by coal exploration over the last, say, 15 years. And so it presents a really low risk exploration with high value outcomes, which is really the key. And then the early commercialization. I guess where we're sitting today, where these production wells are getting drilled, there's a number of open cut coal mines operating, and they're desperate for reliable power. So that's our first market, is really the gas produced from these pilot wells or these 3 production wells, burning that gas on site, generating electricity, and selling that electricity to the local market. And it's relatively straightforward, putting the gas from the production wells into reciprocating engines and connecting to the existing power infrastructure. So that's our early commercialization, which we're already also focused on this year. So these are just more details of the pilot well program. All 3 production wells were drilled very successfully. They met all the key technical objectives, and I guess the highlight feature there is in each of the production wells, there's between 60 to 70 metres of coal and very gassy coal in the production interval. So that's a very, very thick amount of coal. And so, and that's why we're very confident with the results from these production wells. Very gassy coal at these depths and that much coal, and the permeability that we demonstrate through the exploration program. We really expect to get a really cracking result out of these production wells. And so we're very confident and we're very excited for the next 6 months. And just with the exploration program, just with the picture there, I guess the blue box is where we did the exploration program last year. Now we're doing the production wells. And then the green area is where we'll look to do the exploration program this year. And yeah, as I mentioned before, the key strategy is low risk exploration, delivering high value outcomes, and also taking the project through the key development milestones. And that's what we've been able to do very successfully so far. And again, we're very confident with this year's work program. In terms of commercializing the gas, so we see there's significant opportunities for natural gas to play a very important role in the energy market, in the domestic energy market here in Mongolia. There's some significant issues in Mongolia energy market around energy security, reliability, and independence. And yeah, we think gas can play a very, very important role in Mongolia. And I guess that's highlighted by the fact that we've already got an offtake agreement for this gas, any gas that we produce from these 3 production wells this year. This part of the South Gobi in particular, a lot of high energy users based on the mining industry here that are very keen for reliable and cheap cheap power. So yeah, there's significant opportunities domestically. But the big picture is, and the ultimate goal is to be selling gas into the largest energy market in the world, in China next door. And the Chinese energy thematic is probably well known. Gas demand forecast to double in the next 20 years as a forecast shortfall. And I guess the advantage of this project is over all the other potential. China currently imports its gas from about 3,500 kilometers away from Turkmenistan, Russia, Myanmar. And so our project's 20 kilometers across the border, close to the existing network. So there's a real cost of delivery and advantage there. And we're also competing against coal seam gas that comes out of Australia, gets liquefied and taken to China as LNG. And that's a very high cost solution for China. So the real advantage is being located this close to the Chinese energy market. Just in terms of operating in Mongolia, there's a real focus on developing the resource industry. It's really the lifeblood of the economy here, and attracting foreign investment to take these projects forward. There's a lot of potential in Mongolia. It's underexplored, and so there's a real focus on encouraging companies like us, TMK, to come in and explore and develop these projects. And I guess the whole concept of developing resource projects in Mongolia and sell it to China is well established here. There's a large mining industry, which and I think 92% of the exports go south into China. So it's not breaking new ground in that sense. And just as well as Mongolia, I've been working here for over 10 years, and I enjoy the place. I really like the place. I think it's a great place to work, and obviously that's why I'm still here, I suppose. So next slide, please. And I just guess with the current development framework with our partners are Adavale Energy, also an ASX-listed oil and gas explorer, and they've earned a 33% direct working interest in the project by way of a farm-in over the last couple of years, where they've funded the work programs thus far. So they're our partner in the project, and the other partner is really the Mongolian government by way of our production sharing contract, which is a key contract which stipulates the key fiscal terms under which we can explore for and develop this project. And so there's a royalty and also a profit share after cost recovery with the Mongolian government. So they're our partners who are very, very good at supporting us, both Talon and the Mongolian government, in making this taking this project forward. So just in closing, I think we've got a huge opportunity here, the project's huge potential, and this year we'll really see de-risked and taken through some key development milestones, particularly I think with the pilot well program and flowing gas to surface, and hopefully demonstrating the amazing commerciality aspects of this project as well. So thank you very much for your time.
Brendan, thank you for the great presentation. Unfortunately, we've run over time, so we're not able to get to any questions. However, if you do have questions for Brendan and TMK, please use the Q&A function, which can be, use the ASX, the details on the bottom of the ASX releases. But Brendan, thanks so much for your time.
Thank you, Jane.
So next up, we have a presentation from OD6 Metals with the ticker code OD6. A company pursuing exploration and development opportunities within the critical minerals sector. To tell us more, today we are joined by Managing Director and CEO, Brett Hazelden. Good morning, Brett.
Morning. Thanks for everyone for joining.
Let me bring up your presentation.
So we'll skip through the first couple of slides and we'll get to slide 3. So obviously all the good important information there. But let's talk about the project and what we've got. We've got a rare clay-hosted rare earth discovery located near Esperance in Western Australia. Got 2 large tenement areas covering over 4,000 square kilometres. But our flagship project is really the Splinter Rock project on the right-hand side. And that's located just over 100 to 150 k's away from Esperance, where there's a large port, existing roads, etc. Importantly, at the Splinter Rock project, the grades that we're achieving are averaging well over 1,000 parts per million total rare earth oxide content, which is really what we think is going to be the minimum for these things to be economic going forward. And also importantly, the magnetic rare earths, so the dysprosium, the NdPr, the terbidium and dysprosium, all averaging about 22% of the total rare earth content. And that's going to represent about 90% of the economic value going forward. So that's where the money comes from when we come to develop the project. Also importantly, 10 to 80 metre thick intersections near surface, so anywhere between 3 to 30 odd metres from surface. And those big thick intersections will give us a low stripping ratio, so a lower mining cost. I'll touch on metallurgy in a bit later, but 60 to 75% acid leach recoveries to date. Most of the peers in the area are averaging about 30 to 40%. We're expecting to be able to optimise that further, and we'll trade off a bit of recovery with a bit of operating costs going forward. But the clay basins we've identified, 250 square kilometres of basins. We've only drilled probably less than 5% of those, and we're getting really, really targeted exploration now with high levels of success. So if we go to the next slide. We only listed in June last year. We've had lots of drill programs completed successfully. We've been working with CSIRO. We've also had good metallurgy results with ANSTO, and we're now busily working on a maiden mineral resource estimate that we're looking to release this quarter. So quite a successful run since the listing in June last year, which is only 12 months ago. If we go to the next slide. One of the key success factors for us has been this airborne electromagnetic survey that we've done. So there's a psychedelic coloured picture on the right-hand side. Effectively, what we've done there is flown over 11,000 kilometres in the plane up and above these areas. And we've then been able to identify where the granites are, which are shown in green and blue. They're the original sources of the rare earths. They've then been eroded into the valleys, into these clay basins, and that's what we've then been able to identify, which are shown in the yellows and reds. And the success to date of the last drill program we did was 90% of the holes that we drilled actually returned significant high-grade rare earth results. So we think this is the key to success, minimises our exploration costs and obviously maximises our development potential. Go to the next slide. We can have a look at the geology of it all. The geology there, you can see on the top right-hand corner a map of A to B. That's a 40-kilometre cross-section there, 4 major prospects that run through that cross-section. And in the darker pinks are the Baranya granites, which are the original hosts of the rare earths that have been eroded into these basins. So if we look at the next slide, we'll then have a look at each of those prospects. And you can see that the grades there for each of the prospects are well up above those 1,000 parts per million. The grades are good. But if you look at the size of the areas of each of these basins, 136 square kilometres at the centre is massive. Clay cover 5 to 10 metres, and metallurgical recovery is obviously up there and quite important as well. So if we have a look at centre on the next slide, you can see a good cross-section here. So there's 5 kilometres in width that we're doing. We're actually now just drilling the length of this, which is looking to be about 17 to 20 kilometres in length. So you can times out the numbers here, length by width, by depth, by bulk density, and there's lots and lots of tonnes out there. Going forward, what we want to do is there's no point having lots of tonnes. You want the quality tonnes. And on the right-hand side there, you can see an area that we think will be high quality. The met results are good there. The thicknesses are 50 to 70 metres in thickness. They're close to surface, low stripping ratios. That looks like a bonanza zone to a large extent. So for us, that's very successful. If we look at the next slide, you can see the black dots there are the drilling that we've already done in the last 12 months. The yellow dots are what we are doing now. So that centre slide that we're looking at before, it just shows you the area that we're dealing with, and it's a massive area. We're currently drilling out there, expecting to get results. So we'll have the drill program completed in the next 4 weeks, and we'll have results later this quarter in terms of assay results. It's also co-funded by the WA government there, the drilling program with their early exploration incentive scheme. Next slide, thanks. Metallurgy results. So there's lots of talk in the rare earth sector about metallurgy results and what's good, what's bad, what leached agents use. The reality is it comes down to what grade have you got. If you've got a high grade, you can afford more. If you can get higher recoveries, you can also afford more. So we're using a simple hydrochloric acid leach, which gets the ionic proportion and also the acid soluble portion that then gives us the high recoveries from there. We'll be looking to use a thing called a chloroalkali process, which takes salt and water with some renewable energy, produces hydrochloric acid on site, and then also produces a base on site that we then use to precipitate out the final product, but then also neutralise the material as it goes back into, obviously, the mine voids and then rehabilitated. So that's an important differentiation. The grades are good, and also the recoveries are good as a result. Another important aspect on the metallurgy side of things is that we can upgrade the ore body itself by removing the coarse fraction. So anything bigger than 75 microns, we will potentially remove out of the processing and acid consumption pathways. So that will then obviously decrease our reagent requirements and what we need to treat in terms of capital size, etc. And all this testing is happening at ANSTO, CSIRO, Murdoch, along with a whole heap of mineralogy. ANSTO's currently tested over 25 different samples across these areas. We've got another 75 samples currently with them that are just commencing their pathways through the testing program there. And we expect about another 100 samples to come out of the current drilling program that will go to them later this year as well. So it's a big program. We don't composite and we keep it very separate for numerous reasons. Next slide, please. So what it all leads to is a maiden mineral resource estimate that we're looking to put out this quarter. So low share price, it's a great time to be investing in these. We've got good grade, we've got good magnetic rare earths. The thickness in the scale is big. We expect to put out probably what we believe will be one of the biggest initial resources that has been seen in Australia for a clay-hosted rare earth, and then we'll look to upgrade that based on the new drilling that's occurring as we speak later in the year or maybe early next year. And the leach results will obviously continue to drive where we look for these things. So it's a good time to get on board from that point of view. Next slide, please. Corporate snapshot, I won't go through this in detail. We're a very simple company, 102 million shares with some options, sitting at an enterprise value of 20 odd million, a market cap of 23 million, well and truly undervalued based on obviously all the end of financial sell-offs that occurred. It's a great time to get on board. We've all got skin in the game, and there's $3.5 million cash in the bank at the end of the year, financial year, and we're spending about $1.2 million a quarter. So plenty of buffer there for what we need to do. And last slide, bit of investment highlights. So we are located near Esperance. There's existing ports there. There's existing roads. I haven't touched on the rare earth thematic, but everyone should be aware that rare earths are a topical comment. Everyone's trying to westernise the supply chain by building new mines outside of China and having processing facilities outside of China as well to get to the final products that go into wind turbines and electric vehicles. We believe we've got a globally significant discovery, and that will be realised when we release a maiden mineral resource estimate this quarter, and then continue to upgrade that over the next 12 to 18 months. The metallurgy results are good, and we'll continue to optimise those with ANSTO. And as I mentioned, less than 5% is what we've drilled to date of that clay basin area. We're expecting to grow that mineral resource significantly over time. And the board of management that's involved, geologists, metallurgists, project development guys, and corporate professionals that have taken things from exploration all the way through to development. So we know how to do these things. Thanks for everyone's time today.
Brett, thank you for the great presentation. As a shareholder myself, it's actually good to hear the updates. Let me jump into some questions for you. So have you tested these ionic absorption clays? Have you tested if these are ionic absorption clays in both projects?
Not in grass patch. That's currently being tested at the moment. The splinter rock we have, there's a small portion of it that is ionic, but to get the recoveries that will need to be economic, we'll need to get the acid soluble, which is what virtually all the Australian and overseas clay-hosted rare earth projects will need to do as well. So we will need to use acid.
Thank you. And perhaps a little early for this one, but based on your current information, can the rare earth minerals be economically extracted and processed into a saleable product?
Good question. As you say, a little bit early. We sort of refer people back to IXR, which are based in Uganda. They're doing a similar project. The grade's about 800 ppm. We expect ours to be above 1,000. They've been able to put out a positive DFS. We think we can better those numbers. So yes, we think it's economic.
Wonderful, Brett. Well, that's all we've got time for today. A copy of today's recording will be available online in the coming days, but thanks so much for your time.
Thanks for everyone's time. You're awesome.
So next up, we have a presentation from Adavale Resources with the ticker code ADD, an African explorer focused on nickel and uranium. So to tell us more, today we are joined by Executive Director, David Reiki. Good afternoon, David.
Good afternoon, Jane, and thanks very much for the invitation to address people today at the broker briefing and the investor participants that have actually taken time out of their busy day. We might just launch straight into it, but I will pause on that front slide if we can, just for a moment. It's titled Stalking Elephants, and I think probably what it's trying to reflect is the fact that we think we've got some big opportunities. We consider those to be nickel elephants, and the fact that we've got plural there means that we're looking to find more than just one. And I think our early term exploration suggests that we've got a great deal of opportunity in a very large tenement package. The other term that we use here is the East African Nickel Belt is actually quite substantial, and we consider that we've got a dominant position in that particular belt. The next two slides are important notifications and disclaimers, but the actual reference on the bottom of that last disclaimer actually profiles the level of activity we've undertaken really over the last 18 months, but more particularly over the last 12 months. So if I can move to the next slide and just dive into what we consider to be our investment highlights. We're blessed with the fact that we've got an exposure not only to nickel, but to uranium as well. This presentation will focus on the nickel. And I think I'd just like to take a note of the fact that, as we've mentioned, we are basically sitting alongside a rather large elephant, and that elephant lists on the New York Stock Exchange today for about $1 billion. For those people that are interested, it's live zone. You should have a look. Importantly, we've got this dominant position within and around this elephant, and we are in the midst of a reasonably comprehensive drilling campaign that comprises not only RC drilling, but importantly, some diamond drilling. So we see that news flow will continue through the course of the next months specifically, but throughout the balance of this calendar year. We've also profiled the fact that we've got experience within our team. The experience is actually relevant to us because it's not only African experience, it's also in the field of discovering nickel sulfide. Most important to have that right level of credentialed people providing that stewardship in the company. Moving to the next slide, profiled here is our ticker. We should actually reference the fact that we've also got some listed options on the exchange at the moment as well. But essentially, with our market cap of about $15 million, it reflects the fact we've got 500 million shares on issue and a share price that's seen a little bit of an uptick, which is fantastic, referencing and reflecting the fact that we've had some early term success with our drilling program. You can never actually get ahead of the curve and actually say that you're going to have those successes, but from the work that we've done, we had predicted that there would be a level of recognition in the drilling campaigns undertaken and what appears to be some good solid results in our core, but a little bit about that in a moment. Moving to the next slide. Tanzania is a destination. I probably should have a map on this slide, but essentially it has been an attractive destination for many years. It had a period where it was less popular, but I think it's a reflection and a testament to the President Hassan actually getting that level of focus back on the importance of mining in Tanzania. As a crucial part of the country's GDP, we've seen that being moving towards some of the key metrics that she wishes to sort of focus in on and improving that level of dependence upon mining over the next couple of years. But it's also caught the attention of the US and many others, including BHP. But I think the importance of having the US saying, listen, we like what you're doing in Tanzania, and we'd like to see Tanzania as a destination for supply of nickel to the broader community going forward. And that's been reflected in the improvement of the framework agreements that support the understanding as to how a mining company needs to operate in country, and a clear ownership, a 16% ownership. So with this level of focus in and back in the mining space, you're actually going to see not only the improvement of infrastructure, but upgrades that are currently underway. If you can move to the next slide. We need to talk about what we're doing there. Obviously, we're actually in exploration, and we've actually we've got a dominant position in this East African nickel belt. It's circa 1,300 square kilometres, and by any stretch, that's a significant holding. We've actually owned 100% of our licenses, with the exception of Lahuma, which we have moved to 65%, and we're going to move to 80%, and we can trigger up to 100%. As I've mentioned, this licenses are adjacent and along strike from this globally significant Kabanga nickel deposit. And we see that the scale of that is quite significant, but the important feature there is it's not only scale, but it's high grade. The work we've undertaken has really encapsulated a number of exploration techniques, including gravity, magnetics, heli-EM, soil geochem, AMT, which some people may not be as familiar with, but it's widely used in Africa. That's given us the opportunity to focus in and start to target our drilling. And what we've identified with those techniques is where we're now drilling. And so we can move to the next slide. We've actually identified what we've now described as the Lahuma trend. So it extends really over about 10 kilometres of strike. But as you can see on that map, there is a green overlay, which is effectively the targeted soil anomalies, and the red ellipses really focusing on those 4 areas that we think most of the work will be undertaken. Referencing Lahuma Central was only awarded back in May, so we've been very busy on there defining our targets and then undertaking some drilling using the AMT technique. HM2, we initially drilled in 2022 at the end of, identifying that there's the sulfides and the right geology. So I think more work and more drilling is going to be undertaken there, really to try and what we are focusing in on the ultramafic rocks and really the contact, that basal contact where we think that the massive sulfides would sit. HEM2 northeast splits the 2 opportunities, the central and HEM2. And this is actually previously reported disseminated massive sulfides over significant intercepts. HEM2 east is really a bit of an outlier. As you can see, there's 2 main structures, one in the middle and one looking like a parallel stack structure. So a little bit more, if I can move to the next slide, a little bit more about Lahuma Central. Previously, there were some intercepts there, about 8 metres at 1.4%, noting the fact that that was undertaken by Big HP back in the mid-90s. So the targeted acquisition of this was something that featured in our strategy early on in the piece, because we thought that this structure did extend and was rich with nickel sulfides. Move to the next slide. The focus around Lahuma Central has meant that we have in our first hole hit nickel massive sulfides, which is a fabulous result. And that grade we're getting assayed to confirm independently, because these are portable XRF readings, suggests that the grade is going to be sitting between 1 to 2%. And at this point in time, it suggests an average of about 1.5%. And that's really, really encouraging stuff. The fact that we've been able to hit these massive sulfides with this hole, augurs well for the ongoing drilling that's going to happen in this region. If I can move to the next slide, we backed up again with a second hole, not only hitting disseminated sulfides and semi-massive vein that's in that. It demonstrates the fact that we're going to be able to string some of these intercepts together. If I move to the next slide, I'd like to spend a little bit of time on this. Essentially, we've got there the AMT slices cutting through on a 2D where we've actually drilled. It's fair to say that we will continue to drill this, probably in a north-south direction. The focus there is actually on the first 2 holes, which you can see the red blobs hitting those massive sulfides. If I can flip to the next slide, I'd like to spend a little bit more time explaining what we've done here. The historical drill holes that we've been able to gather information on or intelligence on suggested that there were ultramafic rocks and massive sulfides and disseminated sulfide intercepts in this particular region. This strike length is about 1.5 kilometres. That's a positive start. We've actually put AMT lines across this opportunity, 3 of them, and we can actually see that, if I can just spend a little bit of time explaining this image. The actual yellow dots are the planned or in progress holes that we have undertaken. The red dots show that there's been previous massive sulfide hits, and the AMT target anomaly that we are chasing essentially is the red dashed line. Now, the reason why that's slightly offset is it looks as though it's trending and dipping to the west and trending to the north. So as you can see, the opportunity extends both north and south of this current fence that we put in those 3 yellow dots. To actually expand this opportunity. Hopefully we can replicate that pretty quickly and achieve the same level of grade. I can move to the next slide. HEM2, as I mentioned, was a target of drilling late last year, and it suggested that we are in the right area, which is fabulous news. We see that there is the right rock types, and what we're seeing is a trend towards the more primitive ultramafic rocks. Now, for the technicians, we're looking to actually chase those ultramafic rocks to see whether we can actually find, the basal footwall or where the accumulation of the massive sulfides would sit. So the slide on the right, on the left, is basically the section, but the slide on the right gives us an indication and a trail to see where we're going to be able to take this opportunity further north. As you can see, HEM North East sits about 5 k's away from HEM2, and that sits within that overall trend. So drilling underway at HEM2 will give us an opportunity for us to test those rock types and hopefully hit some massive sulfides. But it does actually lead to us to be able to string together a significant strike extension over about 10 k's. We move to the next slide, please. So our next steps, as you can see on the right-hand side of that slide, we're focusing on Lahuma Trend. We have an outlier, which is this parallel structure sitting down at HEM2. We've also had down in Kabanga Southeast, which we're calling HEM4, another zone of interest that will actually feature in some RC drilling. So the plan is to expand our diamond drilling at Lahuma Central, follow up with diamond drilling at both HEM2 and Northeast, do some RC drilling around HEM2 and HEM4 just to keep the costs down, and focus by way of additional information that we can glean from the downhole EM on all those diamond holes. So those diamond holes are being cased at the moment. And as we actually move forward, given we've got this success with AMT, we'd like to be able to select other targets to benefit from that technique. So assays are due imminently. I expect that they should be, if not this week, early next week. So that's good news because everyone's waiting patiently to find out what those grades are. Next slide, please. Like every good explorer, we'd like to actually put back to the local community, and we've actually chosen a couple of what we think are very health-focused and local community-orientated opportunities and initiatives. Barker Health provides training for nurses in the local area, as well as Bridge to Aid, and we're looking after our local school as best we can. If I move to the last slide, it's really just a recap of what we see as the investment highlights. On the right-hand side is that massive sulfide intercept that we see. But our exposure to electrification and decarbonisation is really with the exposure to both nickel and uranium in our portfolio. Neurology, we're near something that's actually going to be listed on the New York Stock Exchange, which gives some transparent value and perspective as to where we see our value emerging in this significant province in the East African nickel belt. We see it as a high-grade, large deposit next to us. We'd like to be able to emulate that with the drilling that is underway at the moment. We're doing this drilling at the moment, and we'd like to see this continue for the balance of this year. And we do have that uranium bonus. I don't think I've probably gone over time, but I will take any questions, and thank you for everyone taking the time out of the day.
David, thank you for the great presentation. You even covered this in your presentation, but I'll jump into it. So how's the company's relationship with the government of Tanzania? And is this going to be able to impact upon approvals and fast tracking the project?
Look, I think the relationship's very good. We take a lot of time and effort. Our chairman's over there on a very regular basis, and I'm looking to get over there in the not too distant future. We renew and refresh our relationships, include everything from the ministerial level down to the local mining commissioners, which we think is important because they are really at the coalface. I think that the understanding as to what this Mining Act has brought is it's brought some clarification to how you need to operate to actually move to what a number of companies are now moving to, which is a mining licence. You're given an opportunity over about a 10-year period to actually find out exactly what you've got, and then move into this mining licence regime. You understand that the government's got their 16%, and they're looking to focus on as much local content as they possibly can. So I think, from our perspective, we've had a very, very good relationship. Both Grant and I have worked in Tanzania, and we've got a very good beachhead with a hand-picked geologists and general managers that operate in country. Given it's an exploration program, you need that level of understanding, and they're in regular contact with all the authorities. So I think that augurs well for us to actually be able to get into a situation where we can define a resource, and that's what we're targeting, and then move to that next important step, which is unlocking value.
Wonderful, David. We have gone over, but again, I encourage attendees to reach out by the contact details on the bottom of the ASX releases, but I want to thank you for your time.
Many thanks. Thanks everyone for joining.
So next up, we have a presentation from Challenger Gold with the ticker code CEL, a company focused on the exploration and development of its South American gold and copper projects. I'll hand you over to Managing Director and CEO, Chris Canal. Good afternoon, Chris.
Good afternoon, Jane, and thanks for having us. And everyone, thanks for giving up your time. We might go straight to slide 3, thanks, which is the snapshot slide. So just one more on, thanks. So look, Challenger, South American gold-focused company, 2 projects, Hualilan Gold Project in San Juan, Argentina, recently voted the #1 mining jurisdiction in Argentina. Definitely the lead. 2.8 million ounce resource, open in all directions. It's already got critical mass and will be a mine. In Ecuador, we sit next to a 17 million ounce ore body, and we've got a 4.5 million ounce resource from 2.5 of the sort of 7 mineralized anomalies we've got there. Ticker code CEL, we've done 250,000 meters of drilling to date. Market cap $137 million. So, I'll have a little tear when I talk about how we're trading at $19 an ounce. And that's partially due to a hangover. We raised $10 million about 3 weeks ago at 12 cents a share. We're currently working through people who took that stock at 12 cents, selling at 11 cents. But most importantly, we've got $13 million cash in the bank, more than a 12-month runway, and it lets us get through some really significant value-adding milestones in the next 9 months, which, look, for an incoming shareholder, there's an opportunity here. Next slide, thanks. In terms of the management team, look, I'm an exploration geologist, got out into the market as an analyst. Started a company called Adavale Resources. 7 years later, we were taken over after getting the project through bankable and almost into production. My CFO, Scott Funston, did a similar thing with Adavale Resources in Brazil. Probably the key hire is there in purple, Mike Zivic. Mike's an Australian mining engineer. We got Mike on board about 2 months ago. Up until that time, Mike was running Barrick's Velarado gold mine in San Juan in Argentina, which is a 400,000 ounce a year gold mine. He was the youngest and longest serving general manager for that mine. He used to drive past us, but really Mike gives us that muscle as we go forward to actually get the project into production and then generate cash flow and dividends for shareholders. Top shareholders, BlackRock, largest resource fund in the world, owned 13.5%. They came along pro rata in that last placement. Queen's Road Capital, which is a Canadian long-only fund, put in $15 million via a note almost 12 months ago. They will go again at some point in time, so they're our backstop. Key difference between us and other companies is board and management have 20% of the company. Sergio, our sort of Argentinian director, who was the project owner, took all shares. I put the first couple of $1 million in to get the company listed. My chairman put a few $1 million in. So our interests are aligned with shareholders. We're not protecting big salaries. We're looking for a value-creating event, which, at the moment, we're going to focus on getting the project into production. That's the best way to add value. Next slide, thanks. So what are the milestones you get? So most importantly, later this month, you get a scoping study. First time we've been able to wrap some economics around Hualilan, and the market does not understand it. I hear things from institutions, oh, look, that high grade underground, it doesn't hang together, it's not going to work, the capex is too high. I think just wait and see the results of the scoping study and all of those questions go away. We're also drilling some regional targets. We've got 30 kilometres of strike, current resources on 3 kilometres of that. So, that's a massive opportunity for us. And then first quarter next year, we'll deliver a pre-feasibility study. Why is that important? Because if the market is like it is now, which is terrible, it lets us draw down royalty funding. So we've got the option of non-dilutive funding. Next slide, thank you. Just a bit about the geology. So that line of hills in the center of page is actually a fault that controls the mineralization. You've had this intrusive or the big engine that created Hualilan come up along that fault. Hot fluids and minerals in those fluids above it. The green is the high grade. You've dropped out green mineralization where you've got a series of faults, and that high grade wraps around the yellow, which is the lower grade mineralization. Key features, we've got high grade mineralization 2 kilometres at the bottom of the page, mineralization another 600 metres north of the page. That line of hills you can see there at the top is prospective. So, Hualilan's still open in all directions and will get much bigger. Next slide, thanks. and just the resource. So the resource has a high-grade core in there of 1.6 million ounces at 5 grams. That's what the scoping study's focused on, and that resource is still open. We've grown that resource from 2.1 to 2.8 million ounces. You can see some of those intercepts at the bottom, 42 metres at 6, that the resource is open beyond. It will get bigger if we keep drilling it, but right now the best way to add value for shareholders is to move towards production. Next slide, thanks. And this is just a heat map of that resource. Key features here are red and pink are high grade. You've got red and pink near surface where I've circled it in red. That actually de-risks it. So we can start with with an open pit, getting high grade material through. We've got almost 1.5 million tonnes there at 3.5 grams at surface coming out in the first year and a half. That effectively pays all the capex back in the first 12 to 18 months. And then if you look deeper, the high-grade red and pink blobs are actually in a northern and a southern area, which is well placed for underground mining. And then of note is that deepest hole ended in 4 metres at 600 metres below the resource. We've got mineralisation 600 metres below the resource. It will get bigger as we keep drilling it. Next slide, thanks. And this is just showing you what we're looking at in the current scoping study. The keys for this scoping study are it's got to be something we can deliver in the current climate where raising money is difficult. It's got to be low capex. It's got to produce at least 100,000 ounces a year. It's got to be low cost and high cash flow. So how do we do that? We have a small open pit starter that de-risks it, and then we go straight underground. And I think that scoping study should tick all of those boxes. And hopefully that drives a re-rate for us. I think if we try to turn this into a $500 million project we can't fund, then the market would hate it. But the scoping study will be aimed on that high-grade core. Next slide, thanks. And I'm just showing you our regional ground position. So everything in orange is us, blue is Newmont, and you can see there's some vacant blocks there that we're looking at the moment. We've also bought the ground around us, the 20,000 hectares. Why have we done this? It just takes away a couple of layers of red tape as we go into production. And why have we got this 560 square kilometre package? You simply don't find 2 or 3 million ounce ore bodies by themselves. And I'll talk to that in the next slide, thanks. So this is a zoomed in version. So on the left, the yellow with the black outline, that's the current 2.8 million ounce resource. You can see the pink there is the intrusive underlying at the engine, if you say, for the mineralisation. You can see there's almost a 1-for-1 correlation. Now those red dots are where we've got high grade mineralisation at surface, so we will extend the resource. And then on the right is the zoomed out version, which I'll talk to on the next slide. So next slide, thanks. So what we're seeing here is the pink are those same intrusives. You can see where the current resource is. The yellow is where you've got this intrusive unit basically coming into the sediments. So it's the same structural stratigraphy as created Wallilan. And there's 30 kilometres of that unit, and we've got 3 million ounces on 3 kilometres. We've just started a regional exploration program. We're 15-20% into it. Key highlights there, 2 kilometres north, we've got 26.9 gram material at surface. That's actually a series of old workings that extend from the northern boundary of the resource another 2 kilometres. So we know the mineralisation keeps going north. We're just mapping it now so we can drill some better targeted holes up there. And then 10 kilometres at an area we call El Penon, we've actually got better than 50 gram material at surface. When you go and pan that gold, it's angular, which means it hasn't travelled far. That system up there, the high-grade gold sits around a 2 kilometre in diameter circular feature that's anomalous in copper and gold. We think that's potentially a copper molybdenum porphyry with the high-grade mineralisation around the edge. Next step there is to do some magnetics to image the intrusives and better target some holes. But look, exciting. There'll be another Wallilan there somewhere, and I think that's the best way to actually add value. We get one hole that's going 20 metres at 2 grams, and we probably add $100 million to our market cap overnight. Next slide, thanks. I'll quickly talk about Ecuador. Next slide. So what you're seeing on the right there is gold in soil anomaly map. Cangrejos, which is a 17 million ounce gold deposit, is in that white box adjoining us. They drilled a large gold in soil anomaly. We've got 15 of these gold in soil anomalies. We've drilled 14 of them, 7 have got more than 500 metre intersections, and then that black box there that captures 2.5 of those anomalies. We've just announced a 4.5 million ounce resource, a little bit over 0.5 gram. Importantly, that's got a high grade core. There's 1 million ounces at 1.2 in there. And you can see some of those drill results from the other anomalies there that aren't in the resource. 800 metres at 0.5 gram, 773 metres at 0.4, including 400 metres at 0.6 of a gram. They speak to themselves. And then the other key feature is Kangarekos, which is next door. We think it's the other half of the system. Recently done a $300 million stream financing deal with Wheaton Precious Metals. So Ecuador is open for business and you can finance Ecuador projects. Next slide. This is showing you the current resource. Purple is high grade. You can see there the drilling was limited by the topography. We couldn't get a rig up some of those steep slopes. What we're doing now, where the red is at surface, is a series of surface channel samples. We'll cut the rocks out in a long channel, treat it exactly the same way as a drill core. And what that should let us do is get that high grade component more than 100 metres away from the hole up towards surface. It could significantly add to this high grade component, which is important. Next slide, thanks. And then this is just to the future exploration potential. These are two anomalies at the north of our concession. We haven't done enough drilling to get a resource. The key there is, before we put a drill hole in, we came out with and announced to the market 4 to 6 million ounce exploration targets on both of those two anomalies. And the drill results you can see there on the left, 774 metres at 0.4, 528 metres at 0.5 to the end of the hole, have done nothing but validate those exploration targets. So for a little bit of drilling, we can more than double the current Ecuador resource. Next slide, and one more. So just to wrap up, so where are we now? We're trading at the same share price we were in the middle of the GFC when we'd done half a dozen drill holes. We've got 7.2 million ounces of resources, so we're ridiculously cheap. How do we get re-rated? Scoping study, which is sometime this month, is the key. I think that's the first demonstration of the economic value of Hualilan, and the market generally values a company at 50% of the cash flows of that project at our stage. You know, we'll certainly have a bigger cash flow than I think the market gives us credit for. An updated resource in Ecuador that captures more of the high grade, and then a pre-feasibility study first quarter next year, which was a big re-rating event for companies like De Grey and Bellevue Gold. And the importance of that is, if the market's terrible, it lets us access royalty non-dilutive funding as well. That's all I'm going to talk to. I'm happy to take some questions.
Wonderful. Thank you, Chris, for the great presentation. Let me jump into it. So from the expansion drilling at Hualilan, are you targeting a mineral resource upgrade? And if so, when can the investment community expect this?
Look, we're not really. So the exploration drilling is going to focus on regional exploration potential. I think if we take Hualilan from 2.8 million ounces to 3.5 million ounces, I don't think we get a lot more value. And look, don't get me wrong, we'll easily take it to 3.5 million ounces. But right now, we've got enough money for the next 12 months. We've got money there to drill some of these regional targets. I think shareholders get a far better bang for their buck if we drill some of these regional targets and find a second Hualilan, because I think if we find a second Hualilan, the market will value us as if we've got 6 million ounces, not the 1 million ounces at Hualilan they're valuing us for now versus the 3 we've got.
Thanks, Chris. And you covered this in the presentation, but the maiden resource for Ecuador has been out now. So what's the next steps for it? Is there going to be more drilling? And perhaps maybe if you talk to that.
Yeah, so look, in the current climate, we're not going to get value for that Ecuador resource. So what we're going to do is softly spend the money on advancing Argentina. There will be that program of surface sampling, which should get a lot more of the high grade into the resource. We'll finish that. There will be an upgraded resource. We've got 5 more holes that weren't in that resource, and then we'll reevaluate what we do with Ecuador. I think in the current climate, we don't want to blow the cash balance out quickly. We want to make sure that, we meet our milestones and have more than a 12-month runway and are not looking to do another cap raise.
Wonderful. Well, Chris, thank you for the great presentation. Again, if we've missed any questions, please feel free to reach out via the contact details on the bottom of our ASX releases. But thank you.
Thank you.
So next up, we have a presentation from Queensland Pacific Metals with the ticker code QPM, a company re-energising Australia with critical minerals production. So to tell us more, today I am joined by Managing Director and CEO, Dr. Stephen Grockout. Good afternoon.
Good afternoon, and thank you for the opportunity to present the QPM Townsville Energy Chemicals Hub project, the tech project. Next slide, thanks. That's the usual disclaimer. Here's a snapshot of QPM. You can read this for yourself, but some key features include three of the biggest tier one lithium-ion battery and electric vehicle manufacturers as significant shareholders. A comfortable cash position and a share price with significant upside, as I'll demonstrate in the balance of this short presentation. First, here's a one-slide summary of QPM. Next slide, please. We are fully vertically integrated from ore supply, gas supply, battery materials production, and 100% offtake agreements. We have excess gas supply to our needs through our recent acquisition of the Moranbah gas project, with that excess gas to be used for highly profitable peaking power generation through the 240 megawatt Townsville power station. We have almost negative 1 million tonnes of CO2 emissions reductions. That's achieved through intercepting waste gas, especially methane from the Northern Bowen Basin, and capturing that before it hits the atmosphere. Excuse me. We have 2.1 million tonnes of ore supply through agreements with 4 of the leading miners in New Caledonia. That's more than the 1.6 million tonnes that we need for the Teck project. All of the non-nickel, non-cobalt ore components end up as value-added byproducts. Even the small amount of leach residue displaces quarry sand as engineered construction fill. All Tier 1 approvals are in place, and the Queensland government has declared the Teck project to be a project of state significance and also to be a significant investment project status. We have unsurpassable commercial security because we have 100% of the nickel and cobalt sulfate production committed in life of project binding offtake agreements with Tier 1 customers who are also investors. All of this leads to the following attractive financials. Next slide, please. This project will spit out $500 million of EBITDA a year and will come into production in time for the EU and North American ESG-led battery chemicals boom. And compared with Indonesian nickel hydrometallurgical plants, these plants that attempt to offset some of their ESG impediments through spending capital on their tailings and effluent, the Teck project capital intensity is actually a lot lower. We have no tailings and effluent to spend capital on. And the nickel costs after byproduct credits are incredibly attractive, representing large and robust margins. And the ore supply, gas supply, Lansdowne Eco-Industrial Precinct location, land availability, all of that enables a cookie-cutter second train plant to be built as a mirror image to the stage 1 plant, and that will benefit from the shared non-process and capital infrastructure that will have already been spent. Here is an update on the project funding. Next slide, thanks. The 2.1 billion project capex supports at least 60% debt. The first thing, of course, that we need to put in place. This is already well advanced, and you can see that on the right-hand side. $1.4 billion conditionally in place. The debt syndicate's independent review is progressing well through their hurdles, and even better, that debt is primarily through government export credit agencies, and they come with attractive tickets. And lastly, we've already got some cornerstone equity in place with more efforts to kick off later this year. But in the non-Chinese battery and EV world, all plans come to naught without ESG credentials to match the growing customer demands. Next slide, please. Some claim that when push comes to shove, in other words, when nickel and cobalt won't be available from clean suppliers, that ESG credentials don't matter. The experts disagree. You can read the text for yourself, but note the credibility of the sources of these quotes, and I have scores more. And it is already affecting commodity price forecasts and price forecasters' scenarios. So your phone, power tool, or EV, if you're driving one, here's where your nickel and cobalt is probably coming from today. But in truth, at the moment, ESG does only matter a little. But that's because today no one really knows where the nickel and cobalt is coming from. And that's why Elon Musk said the following. He said, ESG is the devil. And he's referring to greenwash and a lack of quantitative measurement in the ESG space. Today, ESG can be the devil, but the devil hates the light, and the light is coming tomorrow. And tomorrow, this is what happens. Next slide, thank you. And tomorrow is, say, 2026, just when the tech projects are hitting full production. Here's what tomorrow looks like. Transparent, granular, provenance, and ESG credential reporting and tracking. You look at all of that on the right. All of that is in place or legislated to come into force by 2026. So transparent, granular, provenance, and ESG credential reporting and tracking. And that comes with euro teeth and dollar teeth at their borders. And more powerful than these significant costs to a dirty battery producer, if you're the EV producer, this mandated ESG supply chain provenance and impact reporting comes with your customer standing in your showroom, scanning the mandated QR code on your EV, showing that the 60 kilograms of nickel in the battery pack in your EV is actually sitting on top of untreated effluent disposed into coral ecosystems, and 5 to 6 tons of tailings either dumped into the ocean or sitting in high-risk tailings dams. If people thought Dieselgate was big, I think the consumer backlash to such an ESG supply chain would be bigger. So let there be ESG light, and with ESG EU legislation in place and blockchain provenance and footprint tracking already underway and developing, the light is nearly here. So commercially attractive projects like the tech project, commercially attractive projects like the tech project are already the beneficiary of this very tomorrow. The ESG game drives EV and battery production outside of China. If you want to supply into North America and you want to supply into the EU, you have to have good ESG credentials. Clearly, your project has to be financially attractive, and that is the QPM Tech Project. Thank you very much.
Stephen, thank you for the great presentation. We've got lots of questions, so I'll jump into them now. So will the supply of nickel from Indonesia affect the tech project?
Only positively, because that supply of nickel from Indonesia is almost exclusively into China. There have been some announcements of supply potentially into non-Chinese markets. A recent example would be the announced Ford Vale Huayu high-pressure acid leach project. If you look at the capital intensity of that project, because Ford and Vale are very credible and respectable companies, and they have to tell the truth, of course. But if you look at the capital intensity of that project, it's 40% higher than the tech project. So if you want to deal with Indonesian conditions, that's what you have to spend. Furthermore, the nickel equivalent grade of the ore that we supply, you take into account the byproduct credits. You know, we have 1.6% nickel, 0.18% cobalt. Indonesia's typically about 1.1 and 0.1. Look at the nickel equivalent grade. Our grade is nearly 60% higher. Grade is king, and we win on that front too. So no, the world needs every nickel project that's out there. You've already seen some in this broker briefing. You know, all powered, all nickel projects. It is the most at risk of the battery supply chain.
Thanks, Stephen. Bear with me, I'm jumping around a bit here. So it was referenced that procurement and construction was to commence in February and July, respectively. Has there been a revised timeline for these events?
We're going through all of that with our debt providers at the moment, seeking financial close with the debt providers late this year. We're already designing early works that we hope to commence later this year.
Okay, next one. So when do you expect the gas supply deal to be executed?
Not sure what I can say. Very, very short time. It's just going through minor administrative stuff at the moment, but watch this space.
Probably another one we can't get to now, but so when is the DFS and the final investment decision expected?
So the feasibility study was completed last year, but with the debt providers, they're requiring an additional material beyond the conventional feasibility study. And we're working with all of our key equipment and technology suppliers to secure performance guarantees as well. So we're going effectively above and beyond. And obviously you've got to refresh the capital because some of the heat has come out of the capital market, which is nice. Nice to have some wind blowing in the right direction and doing more detailed design so that we can accelerate through the construction. So later this year.
Next one. So how does the decrease in nickel and cobalt spot prices affect the financial feasibility of the tech project?
Anyone who runs projects based upon spot prices is already in a loser or winner game, depending upon how the spot's going at the moment. What counts is the long-term supply price. And the projections there are massive deficits in nickel coming later this decade. Perfect timing for us. Cobalt's very hard to predict. It depends upon what happens in the DRC. DRC is 70% of the world's cobalt. If they have an Ebola outbreak or another civil war or government intervention, cobalt will go ballistic. If not, there will be adequate cobalt supply. But importantly for us, we are naturally hedged. Our ore supply is linked to the nickel price. So the nickel price comes off, our ore gets cheaper, and ore is our equal biggest cost. So we're partially naturally hedged there. So we're not too fussed. The nickel forecasts look extremely attractive.
Thank you, Stephen. And I think just finally, just to reiterate to shareholders and investors, what should they be looking forward to over the next, say, 3 to 6 months?
Certainly the gas supply and all the gas implications. Some people mightn't have noticed a minor bullet point in there. We become the 6th biggest domestic gas producer in Australia, and I think the 3rd biggest one on the east coast of Australia. There is a lot of gas there, and that gas, the excess to what our needs are, goes into the spot or peaking power market. So that's a very, very financially attractive. The synergies with the tech project are fantastic because, these plants, they're big plants, they don't run all the time. So 90% availability, 10% of the time you're not running and consuming the gas. Guess what? You need somewhere else for that gas to go. We've got it. So certainly a lot of gas developments, finalizing capital refresh, securing agreements with all of our key equipment and technology suppliers for performance guarantees, and just packaging all that up for the financial close by the end of the year.
Wonderful. Well, Stephen, thank you for the great presentation. We look forward to further updates. Thanks for coming on.
Thank you.
And thank you all for joining us today for the Broker Briefing Mining and Resources Investor Webinar. Recordings of today's presentations will be available online in the coming days on brokerbriefing.com, and we look forward to hosting you again soon.